the market never repeats itself exactly. It's different every single time. You think you can get an idea off past data, but every single period, you see these people that have been in the markets for 50 years, like, God, I've seen this before, that type of thing. So just have to have patience and greatly drop your expectations down.
So Linda Raschke, welcome on the podcast. How's it going today?
I'm doing fine, and Domino's joining us too. That's from Andy.
Nice. Perfect. How many dogs do you have? I'm curious.
I have 2 dogs. I have a Hungarian Puli and this foster child that was a rescue dog.
Awesome. Cool. So I was speaking with Mandy Parafsajani. She told me so many good things about you in the past, about what you're doing, what you do in trading, how you've been able to be successful. So I'm really happy to do this interview with you today. So I like to start my interviews with, what is one quote that inspires you?
I love reading all those positive thinking books, Napoleon Hill and that kind of stuff. And probably my favorite author, who's just so simple, is James Allen, who wrote a little thing, As a Man Thinketh. So there's something along the lines of, as a man thinketh, so he is. In other words, what you think is what's going to manifest itself. And so that's probably my favorite quote.
Nice. Have you seen this to be the case in trading as well? Or is it more like a general thing for life?
I think it's anything in life. I mean, it could be, with relationships. It could be a particular business you're starting up. If you're a professional athlete, in other words, our thoughts define who we are. So, and you can channel that into being adept at your profession as well.
Nice. Awesome. So we're going to talk about your story, how you've been able to grow and develop as a trader, and then a little bit more about what you're doing today and your book, which came out not that long ago, which is super interesting. So we'll start from this beginning. So can you tell people how you've been able to kind of start trading? What was that first moment of you beginning to trade?
Well, I started off on the exchange floor. So I went down in San Francisco and became a market maker in the equity options. I leased a seat. And so there's a very different environment than what you have today. It's well before electronic trading, even, having a personal computer in your own home. I don't look that old, do I? But yeah, it's like, I'd get charts and do them all by hand because we didn't have computers. So that's how I started, on the floor, old-fashioned way.
And was it easy from the start? Did you kind of join the floor and then you became good at it? Or did you have some kind of learning curve to go through at first?
I'm still going through that learning curve. I mean, people don't understand, it's like a lifelong process. So sure, of course, the floor has like all through the 80s was a learning curve, in every sorts of way, from seeing new products come on listed by the exchanges, trading markets that then went away, making the transition to upstairs. It was really all through the inception of technology, seeing a fax machine come online. So now all of a sudden you could actually trade from your home and get your statements faxed to you because we didn't even have email in those days. And, progressing through the stages of getting my quotes via FM radio, and then eventually I had a satellite in my backyard, a satellite dish, and then a bigger satellite dish, and that couldn't handle the data. Just the whole progression of things. So seeing the evolution of trading platforms and, using algorithmic execution and just so many different things.
I like to mention the fact.
I think no matter what it is, I think everybody takes their own journey, and I just think that particularly in this business, but it could be with any business, that people way underestimate how long it takes, So I can think of new things I was learning every decade, and it's always, the markets evolve and change. So you never stop, there's never one moment in time where you're like, aha, I'm just such a master of everything. If that ever arrives, the market will be, say, you think you're better than you are, huh? Right?
Yeah, I like to mention the fact that it's always a learning curve, and I've seen this the same thing for myself. You always learn something different. But the thing I think that changes what you learn. You might learn things in the beginning, and then you learn different things later on. So I'm curious to hear for you, what was something you learned like early on and something you learned like maybe recently?
Well, in the very beginning, it was just learning how to price the options, conversions and reversals and the, variables that went into pricing that, which of course is all automated nowadays. But, so they were much more inefficient type of markets, and there was opportunity for arbitrage, and nowadays there's really not any arbitrage that an individual, person like myself can do, because any edge is, nicked out of the market so quickly in terms of any arbitrage opportunity. So I think that made it a little bit easier to, on one hand, to have an edge back in those days. So, it's important to have an edge while you're going through that learning curve, or else you might as well just trade on a simulator, for a long time. But, if you have some type of initial edge you feel when you're going through that learning curve, it helps pay for the mistakes that you are invariably going to make along the way. And for example, one of the early mistakes I made in options was just underestimating risk, when I was short straddles and a takeover, stock. And it just happened to open up much higher than anybody thought. It took me, put me into the red for 5 years. So, I think that if it's an individual, or directing to your people that listen to your podcast, it's not like the markets within a year. It's not like the markets within 3 years. I remember I had been trading for, I think it was about 7 years, and it was like right when the rally started in 1987, and the market just kept on creeping and making new highs. It was like May, June, July. It was right in the middle of the summer there. And then it took about 2 to 3 months of distribution before it then rolled, and you had the October 87 crash. But I remember I've been trading for 8 years, and I was like, wow, I have no idea what the market's doing, because you're much more used to an oscillating market and being able to trade with the momentum and to play, and all of a sudden we just hit this point where it was like every day up a teeny bit, every day up a teeny bit, so it's like this creeper mode, which is actually the strongest type of trend when it's underway. And, that's kind of funny here. I've been trading for 8 years. I was like, I have no idea what this market's doing. So I still think that sometimes,
Is there something you've kind of done recently that like improve or level up your trading that you've done recently?
Not really any lessons from losses or things like that. I pulled in the horns a little bit when I was writing my book, because I don't believe that you can do two things well at the same time. I think that, if you are going to use any leverage, multitasking is the last thing that you want to do. So I still traded every day, but I cut back my size a lot. And so that was a change, a recognition that I wasn't full throttle into the game, with my head, as I had been like the previous 3 decades. It took me longer to write that book than I ever would have thought. I thought I was going to be done in 90 days. It was more like 2.5 years. So. And the thing that I think you learn is that, well, the markets just keep turning. I came to peace with myself that as long as I had on a position somewhere in some market, I didn't have to actively be trading. I could be like long copper or, short crude or something. And as long as I had on some position, I, psychically was involved with the market type of thing. And, maybe it'd make a little change in the trade or the position every day. But, you can't, for me to trade with a lot of leverage, it's just 110% concentration game. So that was not quite the answer to your question, but it was just recognition of a different period in my life while I was getting that book done.
I like that. And probably the fact of you writing a book, like putting your thoughts on paper, really helped you to kind of understand what you're doing and understand the things you've done to get where you are. So are there any things you realized about yourself while writing the book?
I'll tell you what was so funny is that, I have notebooks. I just write down everything in notebooks, just random, like random notebooks everywhere all over my desk. I've got like wire bound notebooks, you know. And if I scroll through this notebook here, you probably can't even see, that one's blank, you know. I got stuff from like 20 years ago in all sorts of different notebooks. So I pulled out all my notebooks and I start, you know, just flipping through the pages to remember different experiences or periods in my life. And the funny thing is that like almost every other page in the notebook, going back for like 30 years, I'm writing down the same words every day, you know. Every day I'm writing down the same words. It's like, what is the play? You know, like, what is the play for the day? Always just to remind yourself, what is the play for the day? I'm like, oh, wow, I was saying those thoughts to myself 30 years ago, and here I'm still writing the same shit, you know? So that was fun, you know, just kind of going back and seeing my handwriting get worse and worse, you know, but I'm still writing the same words and still going through my same little, you know, charts and routines and checklists and stuff, you know.
Who inspired you to begin journaling like this? Was it you who decided to journal by yourself, or was it a mentor or someone who taught
you know, that's the misconception. It's not journaling for me. You know, it's not. I'm not writing down my thoughts. You know, I'm not writing down good or bad trades. I'm not writing down feelings. You know, it's more like I'm sketching out swings and, you know, making notes if there's an ABC, you know, what kind of trade management you'd use, or just always noting little patterns or things like that. So this was probably written like 30 years ago, you know. Start with conceptual framework, okay? Principles that give you an edge. Really, this is like always monitoring for signs of continuation or loss of momentum. I have no idea why I'm writing this stuff to myself. Swing high, swing low, use the movement between these. You know, I'm like, blah, 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 you know. So it's not really journaling. I don't know. I think you're always constantly expressing the voice in your head. And sometimes if you do that on paper, it'll trigger other thoughts or, you know, little creative ideas. I mean, I can't help it. You know, I'm sitting there in the kitchen tonight and I'm thinking about, you know, the ways that you could use a 30-period channel on like a 5-minute S&P chart or a 5-minute chart, you know, to combine it with something else to see the tests better, you know, or see if there's some way you can automate, you know, failed test alert. You know, so it's like, it just never stops, you know. Just, you know, always wanting to play or experiment or tinker. And so these end up being idea books. I mean, 90% of the ideas I never go back and revisit, but, you know, I think it's just keeping a flow. It's keeping some type of process and some type of flow in doing active, productive, you know, types of things, because face it, during the day, I mean, most of what we're doing is not the epitome of productivity. You know, you're sitting there for 4 hours and you might not do anything except, you know, put some Visine drops in your eyes if you're staring too hard. So you have to find other ways to solve that equation for yourself, staying involved in the process.
Mm-hmm. I like to mention those because I know I see a lot of traders now, newer traders that have no journal. They have thoughts, they have ideas, but they don't keep track of them. So I think you have to keep track of your thoughts on journal, on paper.
I just, you know, I write stuff down. If I have to make a phone call to the vet that day, I write that down. Remember to do this. Remember to do that. You know, whatever I'm doing, it's funny. I'm very much a pencil paper type of person, and yet I had this brilliant person who worked for me when I had my hedge fund, and he was just the most adept person with software and hardware and coding, and, you know, knew every little thing there was to know about Excel and how to, you know, hook up all the computers to different you know, backups. And he always typed. You know, he'd always type into his Excel sheets. He'd type in every trade. He'd type in all his notes to himself. So that was the way that he, you know, went about it for himself. So I think everybody has a different medium, you know, that may work for them. I have another friend, believe it or not, he's got his iPhone and he just does little voice notes to himself. He probably never even listens to them, you know, but sometimes just by saying or verbalizing your thought, it makes it more likely to stick in your memory. So
that's powerful. Really interesting. So how did your hedge fund develop? What was that process like?
I became a CTA in 1991 or 92, and back in those days, I had managed accounts. So, you know, we would clear several different firms and do breakdowns, and it was a very lengthy, involved process. So how you get from doing the managed accounts, and then I was a trader for a fund of funds, you know, and part of a hedge fund that somebody else was the operator of, and then I ended up starting my own hedge fund. I had, you know, this other gal that worked with me and two other people that worked with me. And that was an offshore fund that we had in Bermuda. No, it was in the Caymans. It was in the Caymans. And then I shut that fund down when I was going through a divorce in the late 90s because I didn't think it would be a great thing to, you know, be managing money and hedge fund with a, you know, an acrimonious divorce. So then when I started back up again, I became a CPO. So thereby becoming the pool operator and assuming all the liability, you know, as well, and doing the administrative, being responsible for the administrative stuff. So that was the Granite Fund. It was actually like the third fund that I had started. And then when I shut that down, I just basically retired. That's when I wrote the book.
Nice. So it looks like you went through many different phases of trading. Like one was the trading in the banks. The other one was like having hedge fund, and there's many phases like this. Do you think that is what happened, or?
Like there's different trends. You know, after the downfall of 2007, people didn't want to have their money in a fund anymore because there were cases where the assets were misallocated, you know, and the investor didn't have access to the funds, you know, liquidity issues. So then there was a trend where some of my biggest clients actually didn't want to be in a fund structure. They wanted to have full control over the money just in case there was any financial, you know, dislocations that could be more permanent. And so they moved their monies, you know, into a managed account type of vehicle again, you know. So then I had my Granite Fund and, you know, two large accounts. So yeah, everything's an evolution. It's like, you know, paths. So the hedge funds now, I think, are not the same as they were. You know, I think that the funds 10, 15, 20 years ago had a lot more flexibility and creativity. And then with a lot of the impact of the financial regulations, it got more stringent. You know, I think it squeezed a lot of the lower end players out. There were some mergers, consolidation. I saw a lot of deleveraging in the industry. You know, everything just ebbs and flows. It's an industry like any other industry.
So that's what I'm curious about. So now what do you think is the trend in terms of trading and managing money?
That's a really good question because I see a lot of good private family office type of money, you know, where they will have their own entities in-house. You know, they'll do more system development, you know, have their own in-house traders who help manage these large pools of family money. That's one. There's a model where you have, you know, these giant pools of money that are always looking for, you know, new models to run money on. It's a lot more quant oriented. I think that there's less discretion than ever. The macro funds, of course, are discretionary. So I just think there's a lot of money floating around out there. That's the main point, you know.
Yeah.
And you're seeing some people start to give back funds just because they can't put the money to work as effectively. I mean, there's been a little bit of a trend towards that. You know, people have just, you know, gotten too big. They've made their killing, and they're stepping down and giving money back. So.
So what would be your advice for people that are kind of starting out now and they want to be able to manage money for other people? They want to trade other people's money. What would you recommend them to go for?
You have to show a track record on real money. Okay, nobody's just going to give you money to manage. There's nothing like that, unless you're going to put up the risk yourself. Unless you put up monies that you're going to be risking the first 10%, of anything that you're trading. So I would just have to say you have to build up a track record, and then if people like the track record, obviously any business startup is going to be a costly endeavor, and that's what you're doing. You're starting up a business. So, you want to start your own gym, you want to start your own restaurant, there's going to be seed capital, there's going to be equipment that you have to invest in. I mean, so if you're going to start, your own business where you're going to be a CTA or managing money, you're going to have to invest in infrastructure, in legal counsel, in accounting, all kinds of stuff. There's a lot of stuff. So do it with the intent of doing it very big. You have to have something that's really scalable and a product where there's enough liquidity that you have the potential to do it in size. Whether you get there or not, maybe 1 out of every 50 people will actually get there. But that's got to be the end game, that whatever you are doing is totally scalable on size, because otherwise you're just far better off working your own money and trading and taking 100% of the profits and growing that, because when you're running a fund, you're getting paid, but it's a different type of trading, much less leveraged. So some people actually, I think, can make money, more money trading for themselves, just because they can never reach that critical mass of a fund size where it really pays that you're getting that fee and the whole 9 yards. Does that make sense?
Yeah, it totally makes sense. And I've asked the question to many traders before. So what do you think is the thing that investors look for in the track record you give them, apart from like the profit? Are there other things that they look for or that you would have to show them?
Well, you need to see, it depends on what kind of money that you're trying to attract. If you're trying to attract institutional money or some money that has deep pockets, like a lot of times there's entities that give you seed money, and then if they like the performance on the seed money, they can then allocate more money. So, the investor that's going to have the deep pockets that will grow with you, that's your ideal person or entity. And you have to have a real-time record of at least 3 years, because there's just too many changes in the environment. You're just trading 1 year. Who knows? Maybe you got lucky because you were a bull and the market went up, and it really, didn't take brains in a bull market, right? But there's different types of volatility conditions and ups and downs and markets and so forth. And so you have to have a real-time track record of 3 years, and you need to also be able to show that, you're not going to have too much standard deviation in your bottom line. So I think that's pretty important.
Nice. And I think you got to be the right person. You got to be doing stuff diligently on your side. And that's the other thing I want to talk about. So Mandy told me about your habits and the routine you have on a daily basis. I wanted to share kind of what you do daily to people, because that's pretty interesting to hear and understand.
Well, when it comes to trading and stuff, for me, the day really starts when the markets close, and, I log my numbers. I have to put together my game plan. Usually right after the market closes, I'll get out of the office, because you just get too wound up and stuff. So I either go to the gym or ride the horse. I have to do something physical. You could go gardening, you can anything, do something, but get out of the office. And then I come back into the office in the evening to do my work, and I feel like I have a fresh mind. The markets aren't really trading with much volume, so you can make objective more or less. Then, it's just feeling fresh in the morning when you wake up. A good night's sleep. I always have some breakfast, like a piece of fruit or oatmeal or something easy, because then it tides me over for a bit. And that's it. I'm here till the markets close.
How do you sustain that chart down during the day? Is it hard? Because I guess people at first might try and then they feel like discouraged or they cannot sustain looking at the chart all day?
Because you're not staring at a chart all day. You know, I'm looking at different markets. You know, I'm looking at different. I'm you know, doing different research, or I'm just always look. Okay, let me pull up the stocks and see what the high volume stocks are. Let me see what the largest 5-minute bar was. Let me see where this market's trading. Let me see where that market's trading. You know, you're always interacting with the markets. Okay, let me tighten up my stop or manage the stop. I mean, you're actually, and that's, you know, I might write down a thought in my notebook, you know, might look at, you know, what the seasonals are going to be for the next week. I mean, you know, it's a pretty active process. So it's not staring at the chart. You're always gathering information in different ways.
Mm-hmm. And for people who are not too familiar with it, could you share a little bit about what's your trading style, what you look for, what's kind of time frame, and what's the process behind it?
I'm 100% technical. Okay, so everything I'm going to be doing is basic, you know, off support resistance levels and momentum or loss of momentum or chart formation, that type of thing. You know, in a perfect world, you're looking at the heavier volume markets where the swings are cleaner. And I mean, there's nothing like buying an ABC down in an uptrending channel. You know, I mean, you just don't get those that often. So you're always kind of trying to, you know, anticipate or stalk, you know, in a perfect world, I'm looking for a market where it can initiate in the morning and have range expansion or trend in my favor and hold it overnight. So I'm looking for that type of time frame. I mean, you know, I might use a 15-minute to enter. It might be just on a 120-minute. It might be, you know, I'm not looking at the chart to make the trade. The chart just gives me the structure. Then when the market opens, I'm watching how does it trade around the opening price? How does, you know, where is it trading relative to the previous day's high or low? You know, are we testing? I mean, you can use a grid of multiple time frames to help make that process easier for you. You know, I usually have already written down a zone or an area that I would like to be a buyer, and I'm very much a tape reader. So I'm looking at, you know, the last price and the net change. And you know what I can do? Let me just see if I can show you. I'll show you what my little chart looks like there. Ooh. Is that coming across or is it reversed?
Yeah, it's good. A lot of numbers, but yeah, it's good.
Yeah, it's a lot of numbers. And then over here is like my, there we go. That's my stock grid and my relative strength. It's backwards, but you know, at the top of the list are relative strength leaders and laggards, and obviously you want to go where the momentum is, right? You want to go where you want to be trading, you know, the juice to the upside, right? If there's juice to the upside, you want to be trading that. And you know, I'm not trying to catch a falling knife or something, but it's nice if you can catch the turn, right? And then sometimes it's not really the turn where the juice is. Maybe the juice starts coming in the later stage of the move, you know. So you got to go where whatever's in play. And then once you're trading something that's in play, it's much easier watching the price, like I showed you, the price with the net change, you know. So I'm watching, okay, it's going 13, 12, 11, you know. I know 09 was the low, you know. 11, can we test 09? You know, like gold just got down and made a higher low, and then boom, you know, it snapped back up $8 today. So, you know, it's watching the action. And I really do that sort of independent of the chart, even though I have charts, of course, you know. You want whatever time frame you're trading, you know, be it an hourly or a 120 or 240. You want to be a high enough time frame so that you have the wind at your back. And then if you want to use like a little 5-minute continuation pattern to trade in the direction of that swing, that's great. But, you know, I would have to say that usually, you know, either a daily swing or something on the 2-hour or 4-hour type of chart is enough to help overcome the noise level. So that's pretty important when you're trading, is you don't want to be down in that noise.
Mm-hmm. And how do you make sure that you don't miss any trades? Because it seems like there's a lot of things to look at. So do you tend to miss trades or no?
Well, you know, you can't look at it like saying you're missing a trade, because you're limited as to what you can do. I mean, there's 20 markets. I can find 20 trades every day, but that's just not humanly possible to manage on a discretionary basis. So usually what I try to do is do my preparation for, a dozen markets, and then the next day when it opens, it's like, where am I going to catch that tiger by the tail? Which market's going to, give me that open door. So yeah, of course, every day I miss trades in every single market, but that's not the point. The point is to, be positive at the end of the day and make money. It's not like, did you miss trades? It's like, I just want to make a living,
So that's a good point. So you don't look at how many trades you've taken based on how many trades the market gave you. You look at what is your performance and how can you improve your performance.
Yeah, absolutely. It's just like, am I not making mistakes today? If there's a really big opportunity, of course you want to participate in that. Why do I want to trade like corn when it's in a 2-cent range and the S&Ps are moving 30 handles? That would be silly. So you're going to go where the action is. And so corn might move 5 cents, and I missed that, but that doesn't matter. It's like you're playing a game. And I know that if I make a certain number of trades each day or each week, then the numbers work out. You start getting a higher confidence factor from just these statistics, right? And so in order for me to make, X 6 trades a day, right, I'm going to have 20 possibilities, and then I'm going to pick 6 trades, that fall into my lap or where I can work with the market. And yeah, I might, have let one market get away, but you can't look at it that way. It's like you're playing a game.
What would be your advice for people that want to develop an edge in the market? What would you recommend them to go through and do?
How do you develop an edge? Okay. It's pretty unlikely that you are going to develop any type of robust and durable edge in this market now. I mean, every system, if you will, is going to have much bigger drawdowns than people probably recognize. I mean, the system, I could trade a volatility breakout system on a basket of 16 markets, and I know I'll make money every year, doing the system 100% mechanically, even though it's a lot of work, But I also know that it can have a 20% drawdown too. It can have a 4-month drawdown. I mean, that's just the nature of the system, even though it's making trades every day. Yes, there's an edge there, just like there's an edge to trend following, right? Okay, but trend following, you can still have losing years. You can still have big drawdowns. Trend following is a 10-year rolling window. That's the mindset that you have to have statistically. If you're going to be a trend follower, you have to say, I will be positive over any 10-year period, but you might be negative over a 3 or 4-year period, right? So yes, there's an edge, but is it realistic for your average trader? No, absolutely not. I don't know of any private individuals that make money trend following, even though like every, thesis would like to sell you on that, but it doesn't work that way in real life. So where is your edge? Your edge is going to become from being prepared, to experience. I mean, experience is going to be your main edge, period, because everybody sees the same technicals, Nobody's stupid out there. It's a very efficient market. When that horse leaves the barn, boom, that horse is gone, and you're either, on board riding it or, participating in those money flows or not, So your edge is all preparation and experience, and there's very little that you can do to speed up that process. It's just the time behind the screens, the hours, the preparation, and it's a lifestyle. It's not like, oh, I'll trade for 4 hours a day. It's like, no, everybody in my life, is a trader or in the markets, unless they're over at the gym or the bar, right? But, who do I go out to dinner with? Who am I married to? Who am I socializing with? Look, right now I'm interacting with you. So, my best friend, my assistant, everybody online, they're all traders. So it's, this is how I live.
Very interesting, and I think that makes a big impact. Like for me, I learned a lot by being around traders, and I think the same for you. You become better by being around other traders.
Yeah, sure. Because it's fun to I think a lot of traders are very creative, unique individuals, obviously. But it's nice to have somebody that understands what it's like. You know, you can either bitch about how the volume's so light today, you know, and they'll get it, right? You know, nobody else is going to get it. What is she bitching about the volume being light today, you know? But I'm sure it's no different than, you know, professional golfers talking to each other and, you know, talking about the different courses and the adventures and stuff.
So you mentioned edge comes from experience and preparation. I think we've covered preparation a little bit. So what do you think experience gives you exactly? What do you learn from experience?
Well, first of all, at a very basic level, you have to see all kinds of different type of market environments. You know, you have to understand that the range can contract and what that feels like and when the volumes do dry up. And you have to understand when there's outlier events, you know, and the event risk. And you have to understand when there's unusual large gaps and volatility. You know, look at all the cycles that we've gone through in the past, you know, every 5 to 10 years, it's like regime change, you know. So what will happen is a trader will get used to relying on certain relationships, and then the whole thing will invert and the game will change. And then, you know, the trader hits the skids. So even part of the experience is the learning curve is just understanding that the game is always changing. And by that, I also mean the relationships and the correlations, because over time you do develop biases, you know, from correlation. So, for example, I would say in the 80s and the 90s, there was about a 95% positive correlation between the bonds and the stock market. You know, if they were lowering their rates, it was positive for the market. The market, you know, went up, and you kind of went all through the 80s and the 90s of these, you know, going from 14%, you know, rates down to 6% rates. And so, you know, you can see in the afternoon, just like you compare the indices, you know, the NASDAQ against the S&P is looking for confirmation, non-confirmation, right? The way that we use different markets for confirmation. And, you know, oh, okay, the bonds made a lower high, but the S&Ps made a higher high. That's a non-confirmation, so it was a sell. And so all that inverted when you went around the 2000, and sort of there became this deflationary mentality, right? And then all of a sudden the bonds and the S&Ps were almost nearly 100% inversely correlated, right? You know, it's the risk off in a very macro way. So relationships do change, you know, like one time, you know, it used to be that the bonds and the yen were like highly correlated, and then there was 3 years where they were inversely correlated. You know, so a trader has to get used to seeing reliable relationships change and shift, and you know, that's also part of, you know, the process. You know, how many traders have seen a real true bear market? You know, would you have called that big swoon that we had, you know, 2 years ago, bear market? I don't know. You know, so you have to see all different types of products, of markets, experiencing yourself under different conditions. You know, how do you handle pressure? How do you handle drawdowns? How do you, you know, just go through every cycle out there?
That's very interesting. Yeah, that's a very interesting topic. Yeah, of course. Awesome. So where can people find you if they want to connect with you or reach out after this interview?
I have a website, lindaraschke.net, and actually I just put up there, I put this collection of all these articles that I'd written over the last, like 20 years ago, that I thought were still pertinent, you know, on foundation for trading and articles on swing trading and stuff, and we formatted it into like a free ebook. You know, I think it's like 60 pages or something. So, you know, if people go to my website, they can download that for free, and then you'll see the other book that I wrote a year and a half ago, Trading Sardines, was sort of documenting, you know, all of my outlier experiences over like almost 4 decades, you know, and it was going to kind of be tongue in cheek with Hunter S. Thompson, you know, Fear and Loathing in Las Vegas, right? This was going to be fear and loathing in the financial markets, you know, always being on the wrong side of the big gap type of thing, you know, just like way beyond randomness, you know, like I am the black swan, you know, it's like stay out of my path, you know, I carry doom wherever I go. So that's what it's felt like at times, you know, that you've just been on the wrong side of every freak occurrence or gap or tsunami or, swine flu or who knows what. And so it was actually quite humorous. It was, my daughter helped me. She's millennial, so you get that twerpy millennial humor in there. And I tried to use it as a vehicle to pass down all the wisdom that had been passed on to me through the ages, and a lot of colleagues who have actually passed, and I hate to die and have all those things go down, with me, the little tidbits I picked up along the way that were helpful. And so it was just kind of a way of wrapping a lot of the different lessons that I've learned that would be helpful to other people and advice I've been given and, trades that I do, the way that I think, how do you come back from these horrible losses, lots of stories that way, So, because that's what trading's about, is making back those big losses. So you can go and read the first chapter of my book on the website.
Yeah, I'll have a look at that for sure. That looks super interesting. And people will put the link below for that in the description of the video and the show notes for the podcast as well. That's awesome. What are your goals for the future? What do you look up to?
I think that, I always have to be involved in a project. I always have to be doing something. I'll always be in front of the markets. I'll always be trading. And I tried retiring once. I shut down my hedge fund. I actually have 2 barns. I have a 37-stall farm up in Illinois, and I have a 17-stall barn down in Wellington. So I go half and half. And I thought that I have 4 dressage horses, and I thought that I was going to, just become a trainer and, show, and all this good stuff, right? That's sort of like my dream, what I'd always aspired to do. And then it just was very boring. After like 3 months, I was going through withdrawals. I missed the market too much. And, you go out to the barn and it's really, everybody else is engaged in the fun game of, trading or being in their business or something like that. And I missed the stimulation and stuff. So that's when I ended up writing the book, taking some time to do that. And so I'll always be in front of the screens. It just never ceases to amaze me, how things unfold. And I'm learning. I learn stuff every single day. They're like, oh, what does this company do? Wow, I've never heard of this stock. Oh, they do that, And so you're always learning about new businesses, or, oh, let me research, this or that. And so it's a very stimulating, dynamic environment to be in. And I'm slowly working towards getting my PhD in life, which I will probably get the last day before I die. Yes.
Interesting. Awesome. And I have this question I ask all my guests at the end of the interview. So if you could give people one piece of advice on how to succeed as traders, what would that one piece of advice be?
Oh, it's all just an endurance game. I mean, it's perseverance. You want to be a trader, it's like saying, oh, you want to be a professional pianist? Okay, well, you better love it, because you're going to be practicing 8 hours a day for the next 8 years. And then you'll be a professional pianist, or probably longer than that, professional golfer, professional tennis player. How long do you think it takes? What if you want to be a top neurosurgeon? How much stuff do you have to study in terms of medicine, and then how many trials or patients or internships do you have to see, right? It's the same thing, over and over. How many chart examples do you have to see? How many? Because, there's no such thing as one chart pattern. The market never repeats itself exactly. It's different every single time. You think you can get an idea off past data, but every single period, you see these people that have been in the markets for 50 years, like, oh, I've never seen this before, that type of thing. So it's a lot of screen time and perseverance and patience. You just have to have patience and greatly drop your expectations down And then I think you'll have a better chance of not getting too frustrated or down on yourself or angry on yourself. It's very easy for people to beat up on themselves in this business, you know, and to do the negative self-talk. And so I always found it helpful throughout my my career, you know, reading motivational books, you know, getting motivational sites, you know, positive thinking, you know, magic crystals, like whatever it takes. You know, you have to be your own cheerleader in this business because nobody else is going to do that for you. You know, you have to be a very self-actualized type of person and take full responsibility and full accountability. And okay, if you lost money that day, maybe you didn't do your homework, you know, and you're going to have to also become a very, very independent thinker, where you are your own trader. You're not going to, I mean, you can, you know, look at blogs or Twitter or chat rooms or something like that, but you know, you have to come up with something that's your own thing, you know, where it's not dependent on somebody else's opinion, and it has to be strong enough that somebody might be bullish or bearish, you know, on a particular market that you respect, but you might have, you know, you might say, no, you know, this is what I see and this is what I feel, and you know, maybe they're not going to be right this time, but I'm following my program, you know, and so you have to develop your program, and I think that takes people an extraordinarily long time, you know, to reach that point where they have developed their own trading program, you know. So that means your own methodology, your own approach, you know, if it's market profile or, you know, a volatility breakout system, and there's, you know, so many ways to skinning cat.
It's awesome. So thank you, Linda. I appreciate it a lot, and we'll catch you guys pretty soon.